talk about things. It is today's day. What are we? Wednesday, the 21st, I believe, of May, 2021. Unbelievable. Yeah, there you go. And Bitcoin and crypto are moving along swimmingly. They've been in distribution and mean reversion, different time frames, different assets. And of course, there have been intersects of power means and RMLRs in different time frames, notably on still playing out on the weekly time frame, which is pretty powerful stuff. As well as we've had daily, we've had 4 hours, we've had a bunch on like 45 minutes and below, 33 minutes, 15 minutes, so on. Of course, in the very low time frames, you have intersects, a lot. But even on the higher time frames, right? Like we're talking about like the weekly and dailies, we've had intersects, which is powerful stuff. Bitcoin for the past, I don't know, 12, 13, 14 hours or so since the live stream yesterday in the Alpha Trading Discord. The asset has been moving along very nicely with a little bit of a maneuver it had to the upside following that stream. Pretty much what I said would happen was like if it could close that hour during that stream to the upside at or near the top of that central weekly range, then it would probably see a move to the upside. And that's precisely what happened immediately after. You then had a little bit of a pullback, which was expected, followed by more continuation to the upside after that. We've seen the same thing on alts in lesser amounts and greater degrees on some of the less liquid ones. But we definitely saw a bunch of alts starting to move back towards the upside after spending a couple of days dipping down a little bit and causing a lot of traders to have some jittery feet and some concerns or fears or FUD that the market's going to the downside. Look, it can go up, it can go down, it can go sideways. It doesn't matter, right? If you're actively trading, you really don't and shouldn't care about which direction it's going. I don't know if you know this, but there are firms. Yeah, have you ever heard of the firm Cantor Fitzgerald, just for example? Right? If you're an active trader, and if you're a quant trader, you probably should know of that firm, right? They, for many years, have been a quantitative trading company that basically like an exchange that allows traders to buy and sell commodities. And the firm Cantor Fitzgerald, they don't care if the prices go up or down or sideways, right? It's completely irrelevant, right? They make money on the volatility. When is there volatility? The volatility when there's a lot of trading happening. So when the markets are super quiet and there's no one trading, they make less money. When the markets are super busy and everyone's trading, they make more money. So there's a firm that loves when there's more people trading, when there's more volatility happening as well. I mean, you can have high volatility when there's fewer traders, but typically you don't. Typically, especially in the commodities market, typically you have higher volatility when there's many more people trading, not fewer. Again, like I said, you can, in theory, have high volatility when there's fewer traders because there might be a huge delta between their ask and their bid for some reason, right? It could happen. Not very likely, but it could happen. But when there's a lot of traders, you typically will have a pretty good amount of volatility, especially if, generally speaking, the assets are even a tiny bit volatile in any way. You can argue that commodities tend to be less volatile than other assets, but I would point you to the fact that in the US, Bitcoin is considered a property like a commodity, right? So that certainly doesn't hold true that commodities are less volatile, right? Because you know, it'd be wheat, corn, soy, oil. Maybe those things are less volatile than Bitcoin because people use them. People use rice in certain quantities every day, and it's a very predictable amount because there's a certain amount of need that people have for these things. That's beyond just being a cool new form of digital currency, etc. Like it's a thing people need to sustain their lives, so you can measure how much people actually need. So there's less volatility, let's say, in the price of rice or soybeans or even oil, right? Although oil can obviously be volatile, but even so, even in rice and soybeans and corn, there's still volatility. Speaking of corn and other commodities, what grows in fields all tall and green, and then one day comes out with slightly golden tops? Can you see what it is? Can you see what kind of a crop that is? Again, this is, by the way, fun fact, we don't grow too much corn or wheat in Israel, or beef cattle for that matter. Most of that stuff is imported. But can you tell what kind of crop this is? Does this look like corn to you? If you are familiar with farming? If you're not familiar with farming, what's your best guess? Right? What do you think it is? I don't want to tell you. I want you to guess. See if my audience knows a thing about farming. My audience, all three of you. Right? Now, that could be all YouTuber, or you be we're the biggest, we're the best, or we're gonna be. Right? But I don't do that. And maybe that's why my channel is so tiny, and that's okay. But I like to raise interesting questions. So anyway, the Bitcoin market, much like the corn market or other crops that may be, is moving along nicely with the VEPs, as we know. And there are intersects happening on the low time frames, obviously. And we've seen a very nice movement that basically defied the peanut gallery of odds makers, the prognosticators who all said, "Oh, it's going down" 2 days ago, and then yesterday they're like, "Oh, it's going to the moon, and it's going down, and it's going." They're all over the place, and they're unable to see the forest for the trees, or the ears for the corn stalks. And more importantly, right, they jump back and forth in their long-term prognostications. Excuse me. And they treat it as if it's somehow tradable information. It's not. I can give you grand prognostications about the long term, and they may or may not play out. But at least they'll be according to actual probabilities, right? Distribution models, etc. But grand prognostications of high time frames are not tradable on low time frames, and you should not be attempting to trade what someone points out to you, even if it's correct on a grand time frame, if you're trading intraday. Because, very simply put, what's happening in the next, half hour to an hour, um, or even today, is very irrelevant to what is happening over the course of the next year, or even 6 months, or even 3 months, or even 1 month. Yes, certain events, like certain moves within the VEPs, if you have a massive Six Sigma move on a high time frame, um, like if you have a Six Sigma move on a weekly, that will obviously affect what's happening on the lower time frames. And obviously the lower time frames are what created that move on the weekly, right? Um, but let's say I have a Six Sigma move on the weekly. I'm trading intraday. Does that tell me which way to move in the next hour? No. If it's a Six Sigma move on the weekly, it can certainly move a lot following that move in either direction, or just go sideways. And why would that happen? Well, it would happen because the probabilities dictate that whatever happens on a high time frame, like a weekly or something, takes a while to implement compared to what happens on the 1 minute time frame, the 3 minute time frame, the 6 minute, the 9 minute, the 15 minute, and so on. Those happen much quicker. And what happens on those lower time frames can obviously go in either direction. And you will see consistently the zigzagging of the returns around the mean of returns. It happens all of the time. What do the returns do? They distribute away from the mean of returns, and they mean revert to the mean of returns. That's all they do. And they can do it going up, down, or sideways. And they do it all the time. Why do you think it's so useful to look at the asset moving around the mean? Why do you think we have indicators that show you the mean? In fact, they show you the means at many different lengths, like the power mean ribbon, or any of the power mean lines themselves, or the RMLR. Why do you think we have those assets, those indicators? We built them to show you exactly when the assets are distributing away from the means and when they are mean reverting to the means. It's really that simple. Right? It's not magic here. It's not magic at all. By that same token, why do you think we show you the VRE levels? We show you the VRE levels because the VRE levels, just like the Laplace levels and the normal distribution levels, they show you basically price magnets. Areas where the price action is likely to follow the returns to? How can it be that there's the price magnets? How does that work? Well, because of the maths, because of the probabilities calculated by the standard deviations of returns, or the Laplace deviation of returns. These things are measurable. These things are quantifiable, if you will. And yeah, that's why we trade the way we trade at Alpha Trading. So if you would like to trade the way that we trade at Alpha Trading, then I highly recommend you go to our Discord. It is free to enter, and you can get our free volatility starter pack as well. Just go into the Discord, go into the channel called Request Support, click on the button that says Create Ticket. Once you click on that button, it will create a ticket. And once you create the ticket, all you got to do is write in there your TradingView username and say that you want the volatility starter pack. And we will get you hooked up with the volatility starter pack of indicators. You get tons and tons of information about how to trade with it. It's like no joke. It's lots of tutorials, documentation, and of course access to the chat time talking about it, as well as access to the Discord live stream that we do Monday through Saturday, starting usually at 11 a.m. U.S. Eastern Time, and Monday through Saturday, starting at 11 a.m. Although this week it might start a little bit earlier, today, tomorrow, and maybe Friday, just because, I'm hosting it. Bilbo hosts it, and is the main host of it, and so typically he runs it at that hour. I will probably be running today's event a little bit earlier, just because of some things that I have to do. So, but normally it's 11 a.m. U.S. Eastern Time. Anyway, rather than blather on about it, just join us in the Discord. It's free. And you can come learn amazing things, like how to trade, low time frame, volatility, entropy, probabilities, and statistics, or as we know them, as we call them, the VEPs. All right, that's it for now, folks. Take care. Happy trading. Peace.